So today I'm going to be talking about Heron Therapeutics, which is currently valued at $2.78. I'm going to be going through the bear points. If you haven't already seen my video on the bull points, please go and see that. It's very interesting and there's a lot of good things happening in this company. But as an investor, I always like to pay as much attention to the bear points as I do the bull points, so that I know that I have a good stock that I'm going to be invested in. So you can see here that I have a relatively short list of bear points for this company, which have been ordered by the importance that I've placed on them. So the first in the list is that significant sales improvements are still to be proven. So at the moment there's a lot of hype about this company based on their previous presentation, and I think rightly so. It does sound very impressive. The CEO sounds like he knows what he's talking about, and they've said that a lot of the data already points to them having a lot of good quarters ahead. However, this data does need to turn into sales improvements to reflect the current stock price. Also, I think a lot of decision makers base their purchases off of the fundamentals, so it's likely we'll need to wait for that data to see big improvements in the stock price. Okay, so looking at the next thing in the list is that the oncology franchise is very competitive. So they have two main drugs at the moment, Savanti and Sostal. Savanti makes up a majority of the sales, but these two drugs alone, they make up 85% of the current sales. The problem with this is they aren't the leading drugs in their respective markets. At the moment, the markets that they are in are growing, and they have been able to sustain the market share that they've had for the last few years. But if anything were to happen to this is going to cause quite a significant hit to their profit. The management team are good, however, and they have been managing to sustain that market share, but it is a bit worrying that they aren't the leading, because the other drug, fosaprepitant, is actually gaining market share, and if it continues to do that, it could start hurting Savanti sales. Okay, so next in the list is the heavy share dilution. Now this has been quite significant over the last 3 years. They've seen a 30% dilution in the shares. However, as you can see, I have added a bull point for this, which is that they've used these shares to attract a really good management team. So even though this has affected the share price, and I'm hoping that this level of dilution doesn't happen in the future, I do think they made a good move, because that great management team is why this company has so much potential today. Okay, so next in the list is the high debt to asset ratio. Now this is a really high debt to asset ratio actually. It's a 1.2, which means it has a fair amount more debt than it does assets. So we can click here through to the proof here in Seeking Alpha, and we can see here that they have total assets of 108, oh no, sorry, total assets here, 217. And they have total liabilities 251, and of that long-term debt is 174 million. So that's a lot of money that they have to pay off, especially for a company that's only turning over just over 100 million a year. That's really going to be a few years before they've managed to pay that off, and that's going to be affecting their stock price until that point. Okay, so that actually brings us to the end of the bear points. Not too many bear points for this company, and as I mentioned before, I really do recommend that you go and see the bull point video, because I do think this is a good company. I just always think that you have to balance the bull points with the bear points before you invest in any company, so I like to make sure I know good details about both before going ahead. So for my next video, I'm going to be doing a summary about the company and giving some financial projections as well, so please stay tuned to that and subscribe if you don't want to miss it.